Hello everyone, Paul here. Today I'm going to be going over gold and kind of a strategy. Now, if you haven't seen the last two videos I've made, this is going to be similar to that. It's going to be how to trade gold, but with a two-step process on really how to, find all the good trades when you're trading gold in Forex. Uh, my personal strategy here is I focus on the hour. But once you guys understand the strategy, the main part of the strategy is you got to find the overall trend. And once you understand the main direction that it's going, you can come in at any point you want. But me personally, I like doing it on the hour. But you guys can do smaller time frames if you want. I'm not going to cover that in this video, but I will be going over the smaller time frame that I prefer. But anyway, I'm going to set you up with a formula. It's pretty similar to the last couple of videos. And then I'm going to show you the kind of results you can get by focusing on doing it on the hour. Once you understand the overall direction, focusing on the hour, and we're going to look at the kind of results you can get from with this strategy. Okay, so to set up this strategy, there's a two-step process. The first part is setting up the rainbow strategy. I've made videos about this. I've made different videos on how to set it up, but real quickly, I'm going to show you how to set it up. First off, you need to go and search for three smooth moving averages. You're going to click that 3 times, and then you go in here to your settings, and you're going to change it. Now, make sure your colors are bright. Make sure your colors stand out because you're going to have a couple here. So your inputs here for the first batch are going to be 20. And 20 is the main one, so make sure... what I'll do for the 20 is I'll try to make it maybe a little bit more thick than the others. It's really... 20 is like the big main line, so I usually make 20 just a little bit more thick. But then you also have your 25 and your 30. That's the first batch. In the second batch here, we're going to have 35, 40, 45. Again, make your colors bright. And then the last one, we're only going to need 2. Check off the last one, and then you got the other 2. Make sure they're bright colors, and you're going to put 50 and 55. So that's how you set up the rainbow strategy with 3 indicators. The other indicator that we need is something called It's called the Regularized Moving Average Suite. It's by Eli Cobra. So check that one. So you don't really have to change any settings with the other indicators. So that's how you set up the strategy. And the next thing that you want to do is we're looking at gold here. So we're going to go look at the day chart. And what the first thing you want to look for is when it crossed. When did it cross with the rainbow strategy on the day chart? When did it cross? So we can see that gold had crossed right here, and that was on October 25th. So gold has been going up. Gold has been pretty much bullish since October 25th. So we know the direction. So we look at the day to figure out the overall direction of where it's going. So we know the direction of it's going up. So this is when I go to the smaller time frames. You guys watching this video, you can go to whatever time frame you want, but I prefer doing it on the hour. And I'm going to show you the results from doing it on an hour. But when you do this, when you focus on the hour, you're not trading every day. It's not intraday. You're looking for specific moments of getting in. So we know the direction is going up, right? So this is when we use the regularized moving average suite. And we basically come in every time it crosses, it crosses up. It crosses up on the 0 line on the hour. So because we know the direction's going up, so we come in all the moments it goes up. So what we're going to be doing here is we're going to be checking on all the moments where it's going up. So I'll just highlight a couple of them. We see that happen right here. I'm going to mark this one and a couple of them. Got one right here. And we'll do it a couple times. We'll do another one that happens again right here. Happens again right here. Happens again right here. Okay, this is that's a small one right there. I'll do it 3 more times here. Happen right there. We could do this other one, but it looks kind of small. But we'll check this one anyway. This is going to be a small one. This one might be one you have to look out for. And then we'll look at this other one right here. Right here. Now keep in mind that gold is pretty volatile, so just keep that in mind. So if we base it off of all the times that it went up, now we see that this first time that it hit, it was May 17th, and the other time from this was May 14th. So that was like 2 days apart from each other. So what you would do is you would come in on the hour, because we know the overall trend is up because we looked at it on the day. So we would come in right about here, and we'd write it out. Now, as long as it stays above the 0 line, you should be okay. Do not let it go below the 0 line, because that would be your indication to really get out. But if you wrote it from here to here, we're looking at this is about a 59319. This is a 59319. So if we did this at a cent, this would have been $593. So that is turning 1 cent into $593. This strategy. So that is a pretty good move. So that was 1 cent. So that was, what was the number? 59319. 59319, something like that. And then if you did this by 10 cents, you would have made $5,931. So it all depends on how big your balance is, but I would start small and go my way up. So that's the first one right there. So let's check this next one here. Now, it's very easy to figure out when to get in and when to get out. But you do got to catch those. There are going to be moments where it goes up and down. With gold, you got to be alert with that. You might find yourself in a situation to where it's one of those quick up and downs. So you just pay attention. So right here is the next one, and if we came in right here and we wrote it out, if we look at our moving average suite, we could still be in our trade till right here. Wouldn't have made as much right here, but let's just say we got out right here. We were in profit. We saw it. We were looking at it. And we got out right about here. So this is a 43,929 pip move here. 43,929. 43,929. So if you did this at a cent, you would have made $439. Now, if you did this at, let's see, 43929. 43929. If you did this at 10 cents, you would have made $4,392. So let's look at the next one. And this is all because we've identified the direction and we get in when the moving average, the regularized moving average suite has crossed up. So here's another one. This looks like to be a very good one. So we come in when it crosses up on the 0 line, right about here, and we write it out. We could have got out right here, or we could have got out right here, because this is when the moving average suite goes back below the 0 line. So this will be a moment to get out, but I'm going to check this one right here. So hopefully, if this happens and you're looking at it, you get out at a higher price. So this one is a 61,883 pip move. So basically, this is a 61,000x of your money. That's the basic way of putting it. So if you did this at a cent, you would have made $618. 61883. 61883. If you did this at 10 cents, you would have made $6,188. Okay, so that is that one. We see that it works for that one. Let's check this one. Now, we zoom in a little bit. This one is a little bit smaller than the others, so let's just check to see. We see that it is crossing up on the zero line right here, so we know to get in right about here and write it out. So we come in right here, and we can write it out. You can write it out till it crosses the zero line again. You wouldn't make that much. You would make a little bit, but you could also get out like right here. This one would be about a 27,000x. So 27,233. So this one is a little bit of a smaller one, but you still made profit. You still made $272 off of 1 cent. And, you know, if this was 10 cents, you'd be making $2,723. So let's check if I think I may have one more here. There's another small one right here. We'll check this one. So you come in when it crosses the zero line because the overall trend is going up. We ride this one. Now if you rode it to here to when it crosses the zero line again, you won't make as much. You'd make an 8,000x with your pips. You could come in right here. Now hopefully if you're doing this, you're looking at the chart and you realize you're in profit, and you take profit when you have a lot. But, you know, if you get to a 20,000x, hopefully you guys take profit. But anyway, this is a 21,000x. This is a 21,606 pip move at a cent here. This would have been $216. If you did this at 10 cents, you would have made $2,160. So you can see this strategy works really well. Let me see if there's one more. I think there might be one more. Yeah, one more. Let's just do this last one here. So, okay, so at this point right here, if we were looking at the charts probably would have said that it was in a downtrend. But we'll do this one anyway. But even though the trend is going up, we'll check this one anyway. So I do want to do one that is the opposite. So anyway, crosses. Well, this is crossing down, so I'm not going to focus on that. So this right here, if the day chart at the time of this was down, yeah, you probably would have made a lot on a dip. But most likely, the trend is still up at this point. The trend is still up at this point. But so let's just check this small one. It's not going to be a lot. This is just a small. This is a very tiny one. You'd have to be quick on this one. This is a very tiny one. This is only 2 candles. So this is about a 7,000x, $76. So that one isn't a big one. See if I got one more. I got one more here. Now check this one, and then I think you guys get the general idea. So we see right here, we see that it has crossed up on the zero line right here, and if we rode this out to the top, let's just say right here, this is a 16,000x, 1636, 1636. Do that by a cent, you made $160. So if this was 10 cents, you would make $1,603. So you can see that this strategy is very powerful. It helps you find all the good moments to get in. So once again, for review, first you go to, once you have everything set up, go to your day chart. Go to your day chart, you get the overall trend. And you can kind of get an idea that if it's going to keep going up or if it's going to keep going. Look at your moving averages here. You see how far apart they are from each other. This usually tells you the strength of it, because this basically tells you that it's still going to keep going up, because the moving averages, the lines, are not even touching each other. They're not getting entangled. So the direction is still going to be going up long term. So for future trades, you can almost predict that it's still going to keep going up. It would take a lot for it to go to a bearish trend. This 20 would have to cross the 50 down here, and then you'll be in a bearish trend. So once it crosses down on the 55, then you'll be in a bearish trend. But until then, your gold is bullish. So you identify the direction by looking at the day, and then you go to a smaller time frame. Now, I'll do it on the hour. You guys watching this video, you might want to go to whatever time frame you want to use. You can do it on a 15-minute. You can do it on a smaller, but I prefer doing it on the hour because you usually get the best results. But you could do it on a 15-minute and get intraday if you want to. But for me personally, I just do it on the hour, so I want to teach how to do it on the hour. But anyway, that's how a pretty effective strategy on how to trade gold. So why would someone want to trade gold? Gold is like the #1 asset out there. It has the most volume out of any asset that's out there. So you'll find, if you trade it, you'll find a lot of good moves with it, because there's a lot that goes in and out of with gold here. So it has a lot of good volume every single day. It usually never stays in kind of a stuck position or a consolidation period. There's usually a lot of good moves with gold. So that's why a lot of people will trade gold, because it does get a lot of movement, a lot of volatility with it. So just keep that in mind. It is very volatile when you do trade it, but if you understand the direction, you'll have the upper hand. Anyway, if you guys like this video, if you want to learn more, I do have a Discord. So right now it's free to join. I'll put the link below if you guys want to join my Discord. I put out charts that I think are that I see in the charts, different assets, and there's some other things as well in there. So definitely check that out. All right, now if you guys like this video, make sure you hit the like button, hit the subscribe button, and I'll see you guys for future videos.